Hey everyone, welcome back to CryptoScope, where we dig into what's actually going on under Bitcoin's hood, not just the surface level price action. Today we're focusing on Bitcoin around $95 and what several top analysts are saying right now. Stick around because the next few weeks could be critical, and you won't want to act without understanding the scenarios. Bitcoin has dropped below $95,000, and that's not just a random dip. A number of analysts are calling it a technical battleground. John Glover, Chief Investment Officer at Ledden, believes that this breakdown is serious. He argues that by falling below the 23.6% Fibonacci retracement level, just under 100K, Bitcoin may be heading toward a major support zone around $84,000. According to him, there's a clear path downward if key levels don't hold. He also warns that volatility could be high in the months ahead and that a full correction might play out through mid-2026. Glover isn't completely dismissing a bounce. In fact, he expects we could reclaim 100K briefly before any sustained break below 90. But in his view, a revisit of 84Ks is on the table if things go south. On the more bearish side, Glover has also floated the idea that Bitcoin could fall further, potentially into a range of $70,000 to $80,000. He bases this on his interpretation of Elliott wave structure, suggesting that the 5-wave upward move may have completed, and now a multi-quarter correction could be underway. If you're wondering whether this is just a shallow pullback or a deeper trend change, that is exactly the kind of risk he's warning about. He's not the only one sounding cautious. Some analysts echo the idea that unless Bitcoin finds strong footing soon, it could test much lower support zones. This isn't simply a dip. It could be a prolonged phase where risk remains elevated. Now, what's driving this potential downside? A few big picture factors are making analysts nervous. Information vacuum. According to some observers, uncertainty around U.S. economic data and monetary policy may be suppressing conviction. Without clear signals from the Fed or macro data, markets are having a hard time committing. Deleveraging might be wrapping up. Some strategists argue that recent bouts of leverage in BTC futures are unwinding, and that the worst of the deleveraging could be behind us. In particular, JP Morgan strategist Nikolaos Panagertsoglou suggests that once this deleveraging is mostly done, Bitcoin could actually look very attractive, especially when compared to more traditional risk assets like gold. Relative undervaluation. On a volatility-adjusted basis, Panagertsoglou argues that Bitcoin may be undervalued versus gold. If risk capital swings back into crypto, BTC could benefit materially, but timing is everything. It's not all doom and gloom. Some bullish scenarios remain very much in play, even at these levels. John Glover isn't purely bearish. He envisions the possibility of a bounce back to 100 before any deeper move lower. That bounce could be real and might attract buyers who think the correction is already underway, not just starting. Beyond that, Glover has made more ambitious calls in the past. Earlier this year, he speculated, using Elliott wave theory, that Bitcoin could surge to 130K and 140K before entering another corrective wave. While that's not his base case here, it shows he's not blind to upside potential. Here's where you come in. What you do from this level could define your entry or risk profile for months. If Glover is right and a drop to 84K plays out, that could be a deep accumulation opportunity, but only if you have the conviction to hold. If instead, we get a bounce back to 100K, that could be your chance to scale in or take profits if you're already long. If you believe in JP Morgan's macro case, that BTC is undervalued versus gold, then this may be one of the most compelling risk-reward windows we've seen in a while. This isn't a simple buy now or sell now moment. It's a crossroads. So I want to ask you, the viewer, and think about this carefully. Do you think Bitcoin will test 84K, or are you betting on a rebound? If BTC does drop into the 70K, 80K range over the next year, would you consider that a long-term buying opportunity, or would you be too hurt to go deeper? Are you on board with the macro bull case, deleveraging is over, liquidity returns, or do you think economic conditions will stay dry? What's your time frame right now? Are you playing for weeks, months, or the rest of the cycle? Your answers to these questions could shape how you position yourself, because right now, BTC is not just drifting, it's at a decisive level. Here's how we're approaching this on CryptoScope. 1. Scaling in smartly. We're not making one big bet. We want to use part of our capital to buy gradually around current levels while keeping some dry powder in case things go lower. 2. Watching key levels. 95K as resistance, 90K, 84K as potential long-term support zones. 3. Monitoring macro signals. We're paying close attention to data around liquidity, Fed policy, and institutional flows. If liquidity returns, BTC could react hard. 4. Staying flexible. We're ready to pivot. If support breaks, we may wait for a lower entry. If BTC bounces aggressively, we may reevaluate for breakout plays. 5. Risk management. We're not ignoring risk. We'll use stop losses, take profits when necessary, and never bet more than we're comfortable losing. Bitcoin at $95 is not just a pullback. It could be a structural inflection point. With sentiment weak, macro uncertain, and strong technicals on the line, we could either see a deep correction or a strong bounce that sets up a new leg higher. John Glover's downside cases are very real, but so are the potential upside scenarios if liquidity returns and buyer conviction rebuilds. For CryptoScope viewers, this is an emotional and strategic moment. If you handle it wisely, you could set yourself up for one of the most favorable risk-reward periods in recent memory. If you're watching this and thinking this is a trade I want to be sharp on, hit that subscribe button, drop a comment with what you think will happen next, and smash that like if you want more breakdowns like this. Real analysis, not hype. Thanks for tuning in. Stay alert, stay strategic, and I'll see you in the next video.